Okay, let's talk about the setup coming into December. Now, we all know very well about the positive seasonality and that you typically do see some follow through after a big month like we just had in November. So that's the backdrop. Now, let's look at this as in terms of how far we've come from the lows and up about 12% from the October low in a very short amount of time. But if we frame this in regards to the other rallies of at least 10% since last summer, it's still on the low end, right? Not quite 12% again, which relatively lines up with what we saw from the December rally of last year to the February high. It was about 11%. But of course, much smaller than the 20% advance from the March lows, the July highs, and of course, last summer's ended up being a failed bear market rally, 19%. And of course, the initial upswing from the October low of last year to the November high, right? And so it still has, from this perspective at least, more to go. Now, another key point from this angle is that things really changed here because we finally had the ability of a rally to overtake prior high of a previous extension, right? All the other bear market rallies did not do that. And so that happened, of course, as we started the year. And then when that failed and we came back and overtook this February high as this May breakout took hold and so forth and so on. So that will be the next step. And again, it doesn't need to happen right away. And because we've had such few pullbacks along the way here, only 5 declines of last month, and none of them being 1% or more, right? We still think that there's going to be more backing and filling going forward. And so in terms of how that's going to look, we talked about this before, where this looks at all the action again from the October low of last year, trending higher overall, but along the way, multiple different multi-week rallies captured by these relatively steep uptrend lines, and this one being the steepest of them all. And so we started talking about this line right around here, noting that the odds of the pace continuing were small, of course. That ended up being the case, where now over the last 2 weeks, just moving sideways with small moves to either side has simply caused this trend line to be broken. But not much of a pullback just yet. Now, we've seen things like that before where, along the way from the spring to summer rally, where a trend line break didn't lead to too much downside, but it did lead to a character change, some consolidation before the next upswing occurred. Now, in terms of specific numbers, these are all the drawdowns for 2023. And really, it's just been a series of 5 different moves, right? 1, 2, 3, 4, 5 right now. And not talking about waves, just different moves along the way. And needless to say, the downturns had the biggest drawdowns. And now, we can talk about this in terms of from high to low, but with reflexive rallies in between each of these, I think it's important to look at this from a more granular view as well here, where you had 2 different 6% down moves, 3 different 6% down moves here, whereas from that March low to the July high, a handful of pullbacks, but none of them more than 3%. But those seem pretty big compared to what we had recently. Really just 2 pullbacks of not even more than 1%, and really had to blow this up just to find how much this came down, which was hardly anything at all. So we know this is not going to continue. At some point, we're going to see a drawdown bigger than 1%. We're going to see a 1% decline at some point. And it's the question of what that does to the market after this really solid move has some sort of weakness in it. And so, it has a lot of leeway, of course. And one of the things that we saw from last month, which probably gets lost in all the different things that the S&P 500 did, was make a higher low on a monthly basis for the first time in 4 months, right? And so each one of these prior rallies all failed, new lows taken out, so forth and so on, right? And so the last time we saw, right, a monthly higher high or higher low, after a lower low was in April. And of course, that led to a number of months more of ascending price action. So again, we have a good amount of cushion to do that again. Of course, you don't want to see it come all the way back down here and test this area, but this is what we're dealing with. And so in terms of framing this from a much bigger point of view, we talked about this chart before. where this list looks at the biggest moves, right? Trying to eliminate some of the daily price action fluctuations here, where in 2022, most of the multi-week to multi-month declines were bigger than the rallies, right? That came before them, that came after them. That, of course, changed from the October to November rally, where the pullbacks were smaller all on the way until, of course, from July, late July to October, where these drawdowns were bigger than the failed rally attempts, until now, where this one, of course, is much bigger than the prior one. So, the question is, does this big rally, right, snapback rally off of below, can it do the same thing as we saw here, where that kind of kickstarts some momentum, where the pullbacks are now shallower, where then this can then develop into something more substantial to take us to, again, the new highs for the year? And if that happens soon, then this very large potential inverse head and shoulders pattern could possibly get completed. Now, again, we have it framed right here for now, just because the market hasn't pulled back just yet, but it does have a real chance of pulling back more than that. That wouldn't be surprising to anyone. This is a very obvious gap from CPI from 11/14, the last time we had 1% advance as well, where this could easily, I wouldn't say easily come in, but if it did, it would still constitute a potential higher low, which would then still keep the structure of this, potential much bigger bullish pattern intact. So that's all the things we'll be looking for the next few weeks into the end of the year. We'll be in touch along the way, of course. Don't forget to check out these videos and subscribe, and I'll talk to you next time. Thank you.